Okay, well, let's go on to the next segment, which is the M&A side.
Okay, well, it's more of a reorganisation than M&A, but Google has announced today that it's going to reorganise itself into a holding company structure, splitting itself effectively into two divisions. There will be Google and a new vehicle called Alphabet. Google will retain the core advertising, the search and Android and Chrome products, and Alphabet, anything that's considered non-core or to do with capital and funding. The structure said to be modelled on that of Berkshire Hathaway, and the reason for that is to, and it's quite a sensible reason probably, is to make the total value of the group and its investments and their performance more visible to investors. Google, of course, is involved in many areas apart from search and advertising. It's involved in driverless cars, high-speed and remote internet access, quantum computing and artificial intelligence research, and many other bits. What many in the market are saying is that this sort of tidier structure will perhaps open the way up for further acquisitions or disposals. Some people have even mentioned Twitter as a possible acquisition target. We'll see if there's any truth to that going forward. In terms of the management, Larry Page, one of the original founders of Google, will be CEO of the company. Ruth Porat, she'll stay as the CFO of Alphabet. She's previously CFO of Google as a whole. And a chap called Sundar Pichai is promoted to CEO of Google from deputy CEO, so he's had a good day. The market likes what it's heard. They're up around 5.25% at $667. Royal Bank of Canada's got a note out today saying they've got a $750 price target in the old form, so quite an interesting move, and one I'm sure we'll be referring to as we go forward to the balance of 2015.
So we don't think it's a triumph of style over substance, then?
No, I think to be honest, that there's potentially a lot of value inside Google, and this might make it easier for the market to judge that as well.